Hello there, welcome back. Happy Friday. Thank you for tuning in. If this is the first time, welcome, and I hope you would consider subscribing. If you haven't seen my other videos, we are trying to build a community of subscribers who are interested in learning about insurance within their superannuation. And if this is the best 5 minutes that you could spare to just learn something new, then it's a 5-minute time well spent. Last week we talked about how you can access insurance within your superannuation, whether that's through automatic acceptance or voluntary cover, where you have to provide underwriting and satisfactory evidence of good health. But today I wanted to cover off on what types of insurance you can access within superannuation. There are very strict guidelines around what type of insurance you can have inside your superannuation. And mainly these are death cover, terminal illness cover, TPD or total and permanent disablement cover, and income protection, which is a monthly benefit that will provide you with a replacement income in the event that you are temporarily unable to return to your work. So just delving into some of these in a little bit more detail, death cover will be a lump sum amount that your loved ones will receive in the event of your death. Terminal illness cover is also another type of cover that you will get. Generally, you will get this if you have death cover. So you wouldn't necessarily have to ask for it. You will get that if you have death cover. And terminal illness is when you are diagnosed with a condition that is terminal and has been diagnosed with a certification from a couple of medical practitioners, one being a specialist, that you have a life expectancy of less than sometimes 12 months or others 24 months, depending on what is available within your superannuation fund. Total and permanent disablement cover is the type of cover that you would get if you are permanently unable or unlikely to carry out your duties based on your education, training, or experience. And income protection, lastly, is the type of disablement cover that you would get if you're temporarily unable to return to your work. And that may be known by many different names. It could be known as long-term disability, can be called temporary salary continuance, it can be called salary continuance insurance, group disability income, group salary continuance, talking about temporary disablement. It's just depending on the insurance company. But there is actually a drive to make these terminologies more universally consistent, and the most common recommended term that they are being asked to go by consistency is income protection cover. Income protection cover can come in many different shapes and sizes and different forms. For example, the benefit period can be short-term or long-term. It can be 2 years, 5 years, 7 years, or even to age 65. And the waiting period can also vary between 30 days, 60 days, 90 days, up to 180 days, for example. So the ultimate clearly would be income protection cover that's got a long benefit period with a short waiting period, but it'll be very, very expensive. If you do have these options within your superannuation fund, it is best to check with your financial advisor what would be the best one to choose depending on your personal circumstances. But if your fund doesn't provide these options, often there will be a default arrangement, and you need to look very clearly what is the default arrangement, because that might not be the right arrangement for you. The other thing that you need to understand is If you have income protection cover, the replacement ratio is generally only 75% of your salary. You are never going to get 100% of your salary, because that's not the way income protection cover is designed. It's meant to tide you over until you're able to return to work. There are other complications in getting income protection cover that you need to consider. For example, it doesn't mean that you should get income protection cover elsewhere so that you can get a windfall and get 150% of your original income, because at the end of all of that, even though you were paying premiums for all of those policies, they're all going to offset each other, so that you're only going to end up with still 75% of your salary. Something to think about, and we will delve into this much deeper once we do the next few videos. I want to quickly come back to death, TPD, and terminal illness, because these are the types of cover that you will get that will generate a lump sum payment once you satisfy all of the requirements of a claim. The calculation of these amounts are usually based on either salary or your age, depending on the arrangement that is available within your superannuation fund. It is important to understand how that'll be calculated so that you can assess whether that amount of cover is appropriate based on your personal circumstances. Because if it isn't, you still have the option to apply for higher amounts of cover, as long as, of course, you are prepared to provide satisfactory evidence of good health. So just to recap, the 4 types of insurance cover you can have within your superannuation are death cover, terminal illness cover, total and permanent disablement cover, they're all the lump sum amount, and income protection cover, which will provide you with a monthly income replacement if you're temporarily unable to return to work. Thank you so much for tuning in, and if you have any questions, leave me a comment. If I can't answer them, I will find the answer for you, and I will try and get back to you. Thanks again, happy Friday, and enjoy your weekend.